everyone wants to know, how do you travel tax free? And it's one of the most, you know, debated thing ever. Everybody always wants to, they, so you have to be, it has to be for work, the purpose of the trip. So a lot of times people will travel to somewhere that there's like a seminar or an event that has to do with your industry, or if you're meeting with clients, um, and Zoom meetings count too. So you can go to Hawaii and uh, you can't just check your email every morning and call that a work trip. But as long as you are working for half of the eligible work days that you were there. So if you go there on Thursday and fly out Tuesday, as long as you work, so the eligible work days there are, let's see, Thursday, Friday, Monday, Tuesday. So there's 4 eligible work days. If you work Thursday when you get there, and then you take Friday off and you have the whole weekend, and then you work Monday, full day, and then you take Tuesday off to fly home, that's a work trip. But you technically had 3 full days of vacation there, but you were working 50% of the eligible work days, so you can write off that trip. And yeah, that's a great way to write off travel.
That's really handy. So you have to work 50% at least, or
Yeah, over, yeah, 50% of the
50%.
eligible work days. Weekends don't count, and holidays don't count.
Okay, that's handy to know. Now, what is the S Corp reasonable salary strategy, and how can it reduce taxes without crossing IRS lines?
Yeah, so that's one of the huge benefits of becoming an S corp is that you S corps don't pay self employment tax. So once you're making over about 60, 70,000 in your business, you should become an S corp because S corps don't pay self employment tax. And the IRS understands that S corps don't pay self employment tax, and so they say that you have to pay yourself a W 2. And by taking a W 2, you withhold payroll taxes, which is the same taxes as self employment tax. And so you have to pay yourself a wage, but, you know, ideally, right, you just pay yourself $1 because, or, right, because if you have to pay wages, you want to pay the least amount possible. So what you have to do is a reasonable compensation study. So we do a study that gets you the lowest possible, like, arguable wage, and we use software that's made by ex IRS auditors, and so it's all very legit. And uh, so we basically get your wage down to the lowest level we can for what you do. And yeah, so basically, if you make $150,000 a year, and then we set your wage at $50,000 during the year, you know, you save on that $100,000 difference between your wages and how much you make. That $100,000 is not subject to payroll taxes. So 15.3% of that 100,000, you're saving $15,000 right there.